In trading, there are three in-depth concepts that most educators on social media don't talk about. I'm David Capablanca. I was invited to visit NASDAQ in 2022 after winning second place in an official trading competition. I've been trading since 2016, and my trading profits have been verified multiple times by these notable firms. In this video, I want to share three fundamental concepts that help me make trading a sustainable career. First, the importance of float and volume as supply and demand. Second, how to survive your learning curve. Third, don't trade the news, trade your own thesis based on your own research. If you are currently putting in the hard work, I hope that these three concepts can speed up your growth. If you find my sharing useful later in the video, please like the video and subscribe for more realistic trading content. So the first concept I want to cover is the importance of supply and demand. Hold up. This is not about drawing support and resistance lines. In the context of stock trading, the theory of supply and demand is based on volume and float. To help you learn the concepts of volume and float step by step, let me break it down this way. Number one, understand how volume works as demand first. Number two, understand how float indicates supply. Number three, and finally, combine volume and float to understand what it means when volume is stronger than supply, or when supply is stronger than demand. Number one, understanding how volume works as the demand. I like to think of the trading volume as an indicator of how much demand exists for a stock. A simple definition of trading volume is the number of shares being bought and sold within a given time frame. A golden tip for you right here is always read the pre-market volume and the daily volume. High volume can indicate strong demand, where many traders are interested in buying and selling the stock. So for example, I like to use volume to confirm if the news is going to be is strong news or weak news. So you can always check with the headlines of a stock if volume backs it up. So if a headline comes out and it sounds really good and there's volume to back it up, that's strong demand. Now if there's a headline that comes out or news that comes out and there's weak volume and there's weak demand, that's one way to see if the news has demand or not based on the volume. As for lower volume, it can mean the opposite. Maybe fewer people are interested, or they're waiting to see a clearer signal before making a move. So for example, a news headline can come out and then a volume comes in maybe at 9:45 Eastern or 10 o'clock Eastern or 10:30 a.m. Eastern, because the news is being soaked up, is interpreted by people to see if it's good or not. So that's why sometimes you'll see a volume surge later on in the morning, because the demand for that stock came in a little bit late, but that is strong demand for the stock. For traders, understanding volume helps gauge to understand if there's enough activity in the stock to make it tradable. So we as traders need liquidity to get in and out of stock. So you need enough volume to make it tradable, to actually trade the stock. So you need volume and volatility, a certain amount of volume and a certain amount of volatility in order to be able to trade a stock efficiently. Now at the same time, you don't want, on the short side especially, you don't want too much volume, because that could be ripe for a squeeze. Because with volume, there could be both shorts being squeezed and buyers coming in buying the stock, which is true demand. Now, short sellers covering, that's not exactly like true demand for a stock. That's just short sellers getting squeezed, they're getting forced out of it. So I like to gauge whether to see if it's true volume or not. And usually in the morning, right at the morning when the headlines come out, you got to see if there's true volume for a stock, true demand, when volume just starts coming in, buying. And it's important to be able to decipher where the volume is coming from. Is it coming from the short side? Is it coming from the long side? And that's where, the games get played, and that's where we as traders come in with the technical analysis and fundamental analysis and putting the puzzle together constantly. But at the end of the day, volume helps provide insight to market interest. Number two, understand how float indicates the supply. Now the float may be a relatively new concept for beginner traders, so pay attention. I'll make it simple for you. The float represents the shares of a stock that are available for public trading. In other words, traders see the float as the supply of a stock. A stock with a low float has fewer shares available for trading, which often means that price can be more volatile. Let me give you an example. Lucy, L-U-C-Y, it's about 1.3 million float. VFC has a float of over 380 million. Both of these stocks gapped up at the pre-market due to some company announcements. At first glance, which stock has a bigger movement in a day? Pretty obvious, isn't it? Lucy, L-U-C-Y, gapped up from $5 to $13 and dropped all the way back to $7 in a day. In contrast, VFC held its gains better, moving between 19 and 22 during the trading day. So a high float stock typically moves more steadily because there are enough shares to absorb orders without drastic price movements. Number three, combine volume and float. demand versus supply. Now, when you combine volume and float, you get a better understanding of how supply and demand interact to move the stock's price. If volume, aka the demand, is high, and float, aka the supply, is low, prices often go up quickly because there aren't enough shares to meet the demand. Now, in small caps, we see this a lot with very low float stocks. It won't take that much demand to move the price. So sometimes if a headline comes out and it's not like the most awesome headline, it still attracts some demand, and like that demand will move the stock somewhat. Now, if the demand is really not that high, but the supply is super low, then the supply can't handle the demand, and that's when you see this float rotations, which we'll cover in other videos. But the float rotation will happen, many times, and that will cause a massive outlier squeeze, because the supply can't absorb the demand. Conversely, if there's a high float, which means there's a lot of supply but low volume, prices might remain flat or even have a dip because there's low interest. Now, if you've been following my explanation, let me give you a quiz. Imagine a stock with low float and high volume. What kind of price action might you expect to see? Comment your answer down below. I'll send you a surprise if you get it right. Check the comments later. Okay, now let's take the concept of demand and supply into actual trading. So how do you take volume and float to help you make better trading decisions? The answer is to know whether demand is stronger than supply, which means volume is greater than the float, or supply is stronger than demand, which means the float is greater than the volume. Number 4, what it means when demand is stronger than supply. When demand outweighs supply in trading, you'll often see bullish momentum, as buyers compete for limited shares, pushing prices upward. This is especially common with low float stock, where limited availability meets high interest. It can lead to fast upward price movements, such as short squeezes like your favorite GameStop and AMC meme stocks. As a trader, understanding where demand is likely to exceed supply will help you spot potential breakout opportunities. Oftentimes, breakouts happen when short sellers are getting squeezed and there's a combination of buyers coming in and buying. So it's like, what headlines, what news, what catalysts will attract buyers, and at the same time, how many buyers are coming in to help fuel the short squeeze. Number 5, what it means when supply is stronger than demand. On the other hand, when supply is greater than demand, you'll see bearish pressure on the stock price, as sellers are looking to let go of their shares, but fewer buyers are stepping in. So more aggressive sellers, less interested buyers. You can see this kind of price action on high float stocks, or stocks with low trading volume, as there isn't enough demand to absorb the supply, causing the price to fall gradually, or just staying stagnant and not going anywhere. Recognizing when float is much higher than volume will help the traders avoid stocks that are dead and no longer moving, or inversely help traders identify short selling opportunities to make money as the stock goes down. Allow me to give my broker a quick shout out. Cobra Trading is a top trading broker that has competitive commissions and fast order execution speed. Specifically for my trading style as a small cap short seller, Cobra offers a vast list of locates, which means I can easily borrow shares to plan for my short selling ideas. Having shares to borrow is crucial for my success as a short seller, especially for stocks that move quickly on fake news or quick pump and dump agendas from influencers online. Cobra Trading also has great routing options for my limit orders that allow me to get filled at ideal prices and reduce the risk of slippage. If you sign up with the link in the description, you'll have access to Cobra Prime and all of my trading tools, which includes Dilution Tracker, Trade Ideas, and Ask Edgar. So I recommend Cobra Trading if you are looking for a trusted broker for all your day trading needs. Check them out by using the special discount code in the description below. The second key lesson that helped me become the trader I am today, concept of surviving your learning curve. This is very important. So the concept of surviving your learning curve is, you're getting all the information that you need to give yourself the highest odds to succeed, the highest odds for you to stick around, so you gain all the knowledge, all the experience, and all the screen time, everything you need to give yourself the highest odds to succeed. One of the reasons why the failure rate is so hard with trading is that people don't survive their learning curve. They start right away with a fully loaded account over PDT, and then they sign up for a community, they sign up for something, to learn, and they lose more than they should in the beginning months, and they don't survive their learning curve. They quit. So one thing for me is I had going for me early on is that I didn't have much money. I didn't have much money to start with. I had a $2,000 margin account, which I started short selling in. Short selling, I'm talking about like 100 shares, max size. I'm talking which means like 25 shares at a time. 4 bullets of 25 is 100 shares max size. You know, it's just like I didn't have much money to lose. So even if I did have a loss, that was 20% of my account. 20% of a $2,000 account is not that much. You can go, like I was doing tutoring at the time, tutoring and even Uber driving. So like I could recover that pretty, you know, in a short amount of time compared to if I had a big loss, an outlier loss. So, and for me, actually, I thought it was hindering me back then. I was like, man, I'm never gonna have a chance to reach $1 million with these small accounts, this and that. But then I realized, you know what, this is good for me. Like I need to just get all this knowledge. I need to get my 10,000 hours anyway. I wasn't looking to make money before I got the knowledge. I knew I had to get the knowledge while I had no money in the account, because in the future, when I do have money in the account, I need to be ready for that. So it worked out, because from 2016 to 2020, I did not trade with much money at all. I was way under PDT, and I was just practicing. I was gaining knowledge, gaining screen time, gaining information from podcasts, from videos, from as much, or books, audiobooks, as much information as I could. And then, of course, what happens in 2020? Preparation meets opportunity. So the markets were extremely volatile. I had around 5,000 to 10,000 hours of study time. Now, gather some funds together, go over have an over PDT account to trade with, and there you have it. I was ready to capitalize in the beginning in 2020, and that was a foundation. I've grown ever since. The rest is history. I survived my learning curve. So the mistake that most people do is they fund an account with $30,000, $25,000. They're over PDT. They have an outlier loss. They have a 20% of their account loss or more. They take away your morale. They don't make you, you realize quickly this is very destructive if you have a few more of these. And if you have a few more of these, it's over. The trick is actually in the beginning to trade small. For me, it was a blessing not to have money to trade. The more money you have to trade early on, the more chances you have to lose, and the less chance you have to stick around. Those that understood they need to get the study time and the experience and the information in, and not look to make money right away, they have the highest chances to succeed. And that's what I mean by survive your learning curve. Don't trade the news. Trade your own thesis based on your own research. The third golden lesson that I learned is don't trade the news. Like seriously, don't just read the headline and let it be the only reason that made you take a trade. News or macroeconomic events are great catalysts that can move a stock up or down. However, as retail traders, we must always understand that we receive the news later than insiders, funds, or big firms. News headlines can also be written in ways to manipulate market sentiment. So I want to share a stock from recent history that had macroeconomic news affect the stock price. So what I'm going to go over right now is GOVX. So GOVX recently, a few months ago, there was monkeypox news around the world. This is a macroeconomic events news. And overall, we know the history of monkeypox. It's not a deadly disease. It's not like, world ending. It's not pandemic related. It's but it can cause temporary big moves in the stock price, such as in a couple of years ago, we had SIGA went astronomical because that was the first time monkeypox was mentioned in the headlines in a very long time. This is the second time. So we already had a recent history of this monkeypox related news. So GOVX had a massive uptrend for about a week or two or something like that. And GOVX is really hard to predict. So basically, if you're going by the news headline or underestimating it on the short side, because you know the history of monkeypox and how that plays out in the end. If you get too aggressive on the short side, you can get squeezed big time. So it's really, to play it on the news is very tricky. So it's like you got to come up with a thesis and and look for. I like to look for sympathy plays, which we can go over in some other videos in the future. But with macroeconomic events and macroeconomic news, you have world news headline that can cause a lot of demand that comes out of that drives the price up tremendously. So you want to be aware of that. A macroeconomic news can affect the stock price, and we know GOVX is a small cap stock, and the float is relatively small. The market cap is relatively small. With a decent amount of demand, this thing can go pretty wild. So, and that's exactly what happened over a period of a week or two with GOVX. And so, it's important not to underestimate that on the short side, and also at the same time on the long side. We know these small cap companies need cash, and you know, they can drop offerings, they can raise funds, they can dilute their shares at the drop of a hat. So it's like, you got to be careful with it. So just to read it on the headline and to think it's going to be another pandemic or another, you know, and get excited with that, you can be on the wrong side of the trade. So you want to be very careful with how you formulate your thesis for these kind of stocks with macro events and news. And going back to SIGA in 2022, the monkeypox news came out, and that was the first time that monkeypox was mentioned in the news, at least since I've been trading. So, you know, for at least a decade. And so it's SIGA, the stock price drove up tremendously over a period of time. I think it was like a month. And yeah, we know how that ended up, you know. So monkeypox wasn't as big of a scare as people thought. And so the second time around in 2024, it's even less of a scare. But however, with small cap stocks, they can still move up tremendously. So you don't want to underestimate them. And 2 actionable tips you guys can apply right now is always to check the recent history of a stock, and second, to check if that stock is in a hot sector. And you can use those 2 actionable tips to apply to your thesis, to go along with your thesis when you're formulating your thesis, to see how you're going to trade the news headline. So those are my 3 key lessons as a trader who's been through the ups and downs of the learning curve. The best thing I can share with you guys, the upcoming traders, is not my strategy, but my step-by-step process of how exactly I prepare and plan my trades in the morning. If you are interested in seeing my full pre-market trading routine, check this video out right here. Please give me a free like on this video and subscribe for more real talk from real traders on this channel. I'll see you guys in the next video. Cheers.